Greetings and welcome to the latest episode of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their stakeholders re-domesticate out of volatile legal and tax environments like the formerly golden state of California to more predictable pro-entrepreneurship, pro-growth jurisdictions. Today, we are reviewing another report by Zero Hedge entitled Professors Behind California's Wealth Tax Threaten Possible Legal Action Against Critic, referring again to the forthcoming California wealth tax known as Proposition 40. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant, serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. 4 university professors behind California's wealth tax ballot measure sent cease and desist letters to a political candidate named Richard Lucas. His offense, at least in their view, was criticizing them on his website for their roles in drafting the tax and sharing their publicly available contact information. The professors claimed the criticism violated California anti-doxing statutes, which are on relatively thin ground to begin with, considering the First Amendment freedom of expression right, which has been incorporated against the states via the 14th Amendment. Constitutional law professor Jonathan Turley analyzed the claim and concluded it is fundamentally flawed, which is a view that I share, and would not prevail in court. The Alliance Defending Freedom sent a response letter identifying the same deficiencies. The attorney who sent the cease and desist on behalf of the professors has reportedly refused to respond to inquiries since. This matters for business owners because it tells you something about the people writing the tax code or telling the people who write the tax code what to do. The authors of the California Billionaire Tax Proposition 40 are not defending the merits of their proposal. Rather, they are attempting to silence their critics through threatened litigation. One person referred to this as using Gestapo techniques, their words, not mine. One of the 4 professors, Brian Gall of Berkeley Law School, I don't know if I pronounced that correctly, called the critic a clown. That's really professional, professor, whilst simultaneously insisting that linking to his own publicly available faculty page on the Berkeley website was unlawful. The California anti-doxing statutes the professors cited, Penal Code Sections 653.2a and Civil Code Section 1708.89, both require a showing of intent to place another person in reasonable fear for their safety. I have seen no evidence of that intent. If it's out there, I would like to see it. Turley stated it directly. If posting publicly available identifying information is a violation, a significant range of protected speech would be eliminated. Turley, who has followed the wealth tax closely since its inception, described the proposal as economically moronic, which is, I'm going to have to borrow that, and legally questionable, which is, I think, a euphemism. He noted that on the federal level, wealth taxes face serious constitutional challenges and that the California drafters included a retroactive clause that can be immediately challenged. The proposal has already cost California an estimated $2 trillion with a T dollars in taxable assets, as wealthy residents have departed the state en masse. The billionaires who left took with them not only their wealth, but that stream of income that was previously subject to California's egregiously high 13.3% top marginal state income tax rate, which is the highest in the country, that would have continued indefinitely. Some people might call that cutting off your nose to spite your face. The co-author of the ballot measure, Berkeley professor Emmanuel Saez, admitted during a debate against economist Arthur Laffer, whose name you might remember from Econ 101 back in undergrad, that the tax will not be a one-time event. Let me say that again. Berkeley professor Emmanuel Saez admitted on the record this will not be a one-time event. His statement, he does not think it is going to be a one-time tax because you cannot surprise billionaires more than once. I would argue that you can't surprise them at all, not even the first time, considering that they are leaving. But that's just my commentary. He described the trajectory as a permanent, not a one-time, which is what's being proposed, but a permanent wealth tax at a low rate, who knows what that means, lasting for a number of years. Well, that's kind of a contradiction, permanent versus number of years, but I won't split hairs. He noted that other states and the federal government may follow with their own wealth tax proposals. I'm sorry to say, but I think he's right about that. Congressman Ro Khanna, who represents California in Congress, stated last week that the threshold must drop from $1 billion with a B to $50 million with an M dollars. The federal proposal, which is championed by Senator Elizabeth Warren, includes a 14% exit tax on net worth above $50 million. The pattern is worth commenting on. The authors propose a tax. The tax is marketed as a one-time levy on billionaires. Surprise, surprise, one author admits on camera it will not be one time. A congressman announces the threshold should drop to $50 million. A critic publishes criticism. The authors respond not with a reasoned defense of their proposal on the merits, but with a legal threat to suppress the criticism. The legal threat is analyzed by a constitutional law professor and First Amendment litigation organization and found to be without merit in their view. And the attorney who sent the threat has gone silent, at least as far as I know. For business owners in California, the question is not whether this wealth tax will pass. I think it will. Of course, I would like to be wrong. The question, rather, is what kind of tax environment produces authors who respond to public criticism with cease and desist letters rather than substantive rebuttal. The answer is an environment where the people writing the rules do not believe they should be held accountable for their consequences. Now, keeping all of that in mind, redomestication is the lesser known legal process of transferring a company's state of domicile to a new state without dissolving it, without creating a new entity, and without triggering federal income tax consequences, but only when performed with the requisite formalities under the Federal Internal Revenue Code, applicable Treasury regulations, and the destination and departing state statutory frameworks. When executed by a professional, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. That is to say, there is zero operational or financial disruption. I have successfully completed redomestications from all 50 states, including California, by the way. I don't know why this myth persists that you cannot redomesticate out of California. That was the law years ago. That has not been the law for a long time. Again, I have successfully completed redomestications from all 50 states and for limited liability companies, partnerships, subchapter S entities, and subchapter C corporations. And I have a 100% success rate to date. Foreign entity registration is not the same thing as redomestication because foreign entity registration, also referred to as Foreign qualification does not change the company's domicile. Rather, it keeps the entity in the former state indefinitely and merely adds a second layer of compliance obligations in the destination state. Meanwhile, a traditional merger, which is also not the same thing as redomestication, creates a new distinct entity in the destination state, may require the issuance of a new federal employer identification number, and can trigger serious tax consequences. Finally, dissolution should not enter the conversation at all because dissolution terminates the company. It is the legal equivalent of the death penalty for that entity. Dissolution is a going out of business maneuver, not a relocation mechanism. Dissolution is often a taxable event, especially for non-disregarded entities, and when performed incorrectly, can expose the owners of the company to unlimited personal, joint, and several liability for the company's assets, known and unknown. You heard me right. If you have a so-called professional suggesting dissolution as a relocation option, please seek better advice. Redomestication, when paired with a change of personal residency and this is an important a reduction or outright cessation of business operations in the former state, can reduce or even eliminate state tax exposure there for the entity and its owners. Don't take my word for it. Ask your CPA. Now is the time to consider acting before the California legislature in Sacramento changes the law to hinder or even eliminate the option of redomestication. If you have questions regarding potentially redomesticating your existing LLC or corporation out of California or out of another state, please use the link in the description for more information on this process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information illuminating. As always, the information in this presentation is necessarily general in nature and is not legal or tax advice, nor should it be construed as such, because that advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations on this topic, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to that opportunity to speak and perhaps even work with you very soon.